Platinum group metals will crash by 2030. Hello and thank you for joining me today. We're here to talk about the investment potential of platinum group metals, or PGMs, namely platinum, palladium, rhodium, and their lesser-known counterparts like iridium and ruthenium. Traditionally, PGMs have been attractive to investors due to their industrial uses and scarcity. But today, I'm here to explain why PGMs could actually be a poor investment in the mid to long term. Let's break down why these metals may not live up to expectations for future investors. 1. Declining automotive demand. First and foremost, PGMs are heavily reliant on the automotive industry, especially for the production of catalytic converters in internal combustion engine (ICE) vehicles. Currently, around 40 to 50% of PGM demand comes from this sector. Catalytic converters use platinum, palladium, and rhodium to reduce vehicle emissions. But here's the problem. Battery electric vehicles, BEVs, don't need catalytic converters at all. As governments around the world enforce stricter emission regulations and automakers accelerate their transition to electric vehicles, EVs, we expect the demand for internal combustion engines to shrink dramatically. In fact, by 2040, the International Energy Agency predicts that 60% or more of all new vehicle sales could be electric. This means that a major driver of PGM demand could plummet by up to 80 to 90% as BEVs gain market dominance. Hybrid vehicles may provide some temporary demand, but the overall trend is clear. PGMs are losing their biggest market. 2. Rising competition from other technologies. Next, let's talk about technological competition. The transition to BEVs isn't the only factor working against PGMs. There's also competition from solid-state batteries, which promise better energy storage, faster charging, and longer life than current lithium-ion batteries. As battery technology advances, the case for using hydrogen fuel cells, which do use platinum, may diminish. Furthermore, even in sectors like heavy-duty transportation and shipping, where hydrogen fuel cells have more potential, there's no guarantee that PGMs will dominate. Alternative technologies like synthetic fuels, biofuels, and further battery advancements are being explored. So, while platinum could see some demand from hydrogen fuel cells, it's unlikely to offset the massive losses from the automotive sector. 3. Weakness in non-industrial demand. Many PGM investors point to non-industrial demand, specifically jewelry and investment products, as a reason to stay optimistic. But let's take a closer look at these markets. Jewelry demand. While platinum is popular in high-end jewelry, demand has been stagnant or declining in recent years, particularly as consumer preferences shift to more affordable alternatives like white gold or palladium. Moreover, global economic uncertainties and shifting wealth patterns could further erode the high-end luxury market that sustains jewelry demand. Investment demand. Yes, PGMs like platinum and palladium are often seen as a hedge against inflation or economic downturns, but they lack the historical depth and liquidity of better established investment metals like gold and silver. While these metals do hold some value as a diversification tool, they don't have the same wide-reaching investment base, which could limit price growth potential over time. 4. Volatility and price decline. Finally, we need to address the inherent volatility in the PGM market. Prices for platinum, palladium, and rhodium are highly sensitive to industrial demand, geopolitical factors, and market speculation. Just look at recent years. Palladium soared due to supply shortages, but this is not sustainable over the long term, especially with declining demand. As demand from key industries shrinks, PGM prices could become highly volatile, or even see sustained downward pressure as surplus supply grows. Investors may find themselves trapped in a cycle of price spikes followed by steep declines, which makes long-term gains difficult to achieve. If we compare PGMs to other precious metals, such as gold or silver, their lack of stability and consistent demand growth becomes clear. Gold, for example, is a time-tested hedge against inflation and economic uncertainty, with deep market liquidity. PGMs, on the other hand, are more prone to market shocks and less predictable over time. To summarize, PGMs may have been a compelling investment in the past, but their future looks increasingly uncertain. The automotive sector, which makes up the bulk of demand, is set to decline sharply as electric vehicles take over. Technological competition, shrinking jewelry demand, and volatile prices further undermine their investment appeal. For those looking at the mid to long term, it may be wiser to explore alternative asset classes, whether it's traditional precious metals like gold, or more forward-looking opportunities in green technologies and renewable energy sectors. Thank you.